Welcome back. You're watching Business Morning on Channels Television. Let's talk commodities now. And, well, with the release of the National Bureau of Statistics, January headline inflation by the National Bureau of Statistics, we still see inflation numbers trending upward. And in particular, because of an increase in food inflation, which increased at a faster pace to 17.82% from 17.39% recorded in December, despite a fall in imported component, which was 20.6% in January versus 21.58% in December. Let's talk to Ada Akonobi, who is a senior economic research analyst with Financial Derivatives Company, to get her perspectives on this and, of course, talk about the rest of the commodities. Good morning to you, Ada. It's great to have you on the program.
Good morning, Harriet. Thank you.
So it's a good day for us to continue our food inflation conversation, especially as this seems to have continued to gallop. And it's not unconnected to the fact that there was an increase in bread and cereals. Why?
So, well, if you look at inflation, measures the price, the consumer prices year on year. So essentially, a basket of food prices or commodities that you bought to January 2016 is about 17.8% higher than what it is now in January 2016. But then inflation is broken down into other components such as the food and the non-food basket. So as we've rightly projected, the core inflation and month-on-month inflation decline, which is very essential as well. It's not just looking at the headline inflation. We have to look at other components as well. But then we're having the increase in the food basket. And if you look at the 6 products that are in the food basket, we have bread, cereals, like you rightfully said, meat, oil, fat, and tubers. And we know that bread and cereal are extremely exchange rate sensitive, and that's why we're seeing we're seeing an increase in prices in that and in bread and cereals.
But then I thought at some point these FMCG companies had managed to find ways around sourcing for flour for their various products that they make, for instance, and then taking a look at the prices that we get usually from FDC, you see that it's still stable, at least for 50 kilogram of flour, which the average baker would need to buy. You still get it at 11,000 naira. So why do we still have a lot of disparity, and why do we still have a lot of people wanting this foreign currency to buy flour?
So December 2016, a lot of forward contracts were matured. So that's why we had most airlines and FMCG companies getting access to forex to import some of the raw materials. That's why we see some sort of decrease in wheat flour prices. But then there are other components too that are involved in the production of pastries or bread. So flour. Sugar, exactly. So 90% is flour, then about 10% is margarine, sugar, and all those we see like 100% increase in the prices of those commodities. So despite we're seeing a reduction in flour prices, that happened in February, but then it's yet to reflect in the price of bread. But then traders will take advantage of this because other components as well are increasing. So I mean, there's still the forex supply bottleneck that still needs to be addressed for us to see some sort of stability in prices.
When you say stability in prices, some people will readily argue with you that they can't get a loaf of bread for 300 naira anymore. In some areas, even some bakeries, you get it between 350 and 400, depending on your taste. So there are varieties of bread that you can buy, but at this time the average Nigerian really isn't interested in variety. They're just interested in getting the normal bread that they can afford to eat in the morning and go to work, or use it for sandwiches.
Yes, well, generally I think that the market structure is a bit it's quite defective in the sense that we are seeing oil prices are about $55 per barrel. Our production reportedly is back up to about $2 million barrels per day, and then you'd expect that it reflects in the strength of the naira, but then we are seeing the parallel market at 510 and per dollar, and the pound about 625 naira per pound. So it's quite interesting. So there's sort of distortment in the market structure, and that's why it's not really trickling down into the price of other commodities and the strength of the.
But Ada, you will agree that the black market doesn't totally source. They don't source their funds from the official window. They have alternative sources that they get it from, and so we'll continue to see that disparity, even though we know the central bank is trying very hard to make that market a little irrelevant, but that can't necessarily happen because you have retailers going to that segment of the market to use it anyway. So in the near term, in near to medium term, this likely will continue to happen and continue to pressure the cereal, the flour, the sugar, and all other components.
Well, even if we have a significant inflow of forex inflow, it goes to a particular regulatory body, and it's not a free market, so they get to control how much is being dispersed to the public. So until that market structure is determined or very clear and transparent, we'll continue to see this disparity in prices.
And we'll also continue to see...
Which would definitely trickle down, because all these, there's a common factor in all this anyway, which is the forex. So if we have that market distorted, that would definitely trickle down into the price of other commodities which depend on that.
Okay, so this is going out on a limb here, because we've just gotten the January inflation numbers.
Yes.
Because we're coming out from January, which December, January, festive season, going into next month. So most likely we would see a tapering of food inflation when a February headline inflation comes out?
Well, January typically, and in other years, January there is inflation typically reduces in January because most income has been spent on festivities, and the consumers have very little to spend because there are school fees and their other necessities. But then we're still seeing, an increase in inflation. And if as it is, if the exchange rate is about 510, and we have diesel prices at 265, and kerosene and gas, so we definitely will get to see inflation for February increase as well, until these underlying factors are taken care of.
Adakonobi, thank you so much for coming on the program this morning and talking to us on these numbers.